Okay. Welcome to Fintech What the Heck. I'm your host, Andrew Carpenter. This is the podcast all about fintech and the future of data. Today, I'll be talking about navigating exchange requirements and digging into the evolution of data sales with Intrinio's Chief Sales Officer, Yates. And introducing you to Montana, who's my dog. Say hi, Montana. Hello. If you're looking for market data, you might not even know to call it market data. It could be your first problem. But market data usually is the industry term in finance and fintech for stock prices. And usually you get lumped ETF prices. Mutual funds have net asset values. Those get treated a little bit differently. But and recently crypto can get lumped into this broad catch-all as well. But traditionally, when most people say they're looking for market data, what they mean are the underlying prices for securities like ETFs and stocks. And Intrinio provides a lot of that data. You can get that from us. But if you're just starting out on that journey of, for some reason, you need market data, you kind of have two choices. You can hook up with a provider like us, and we do a lot of the work for you. Or you can just go and try and do it yourself and get the data directly from the exchanges where that data is created. So I'm going to walk you through just a few of the basic principles if you want to do it either way. If you want to get it from us or if you want to get it from a different provider, like how does this data even end up in your Robinhood trading app or on Yahoo Finance or on a billboard in Times Square showing levels of like the Dow Jones industrial average. So if you wanted to go let's just start with real-time stock prices. Immediately, your first problem is going to be, what do you mean by real-time stock prices? There is this concept that the SEC mandates of the consolidated tape, which pulls in stock prices from all the different exchanges across the United States and combines them. And every time a stock trades on one of those exchanges, it's consolidated and displayed to you through this consolidated tape. And there will be lots of asks and bids, which are terms that you should know if you're buying financial data. And those are the ask prices are what someone who owns that stock is asking to sell it for. The bids are what someone who wants to buy that stock is bidding to buy it. There's a lot of nuance about how stock asks and bids make it onto a specific change. One of the more recent nuances of that topic has been something called payment for order flow. And so what ends up happening is folks will pay to get orders placed on their exchange. And this is where a lot of the profits for companies like Robinhood come from. And they're getting paid to send the trades that individuals are making to specific locations where they then fill and match those orders. But without diving too deep into the weeds of payment for order flow, let's just say that you're trying to display this, real-time stock prices on your website for your users to increase engagement, and they can come and they can see, I'm doing research on this platform and I want to know what the level or the last sale prices are for the stock I'm researching. Is it up today? Is it down? That's really helpful information for anybody who's thinking about doing a trade, which is what most retail traders, even professional traders, they're watching the stock price because the value of that stock is relative to what it's trading at. So if you're finding it's undervalued or overvalued, you need to know what level that stock is trading at currently. So you might want to display this on your website. So the first thing you have to decide is, do you have to have that consolidated tape, which is the gold standard for stock prices. It's consolidating across all the different exchanges, NASDAQ, NYSE, IEX, MEMX, on and on. There's NYSE National, all these different exchanges in the United States, dozens, maybe more than a dozen. And if you get the consolidated tape, what you're getting is called the National Best Bid, Best Offer. In the industry, you'll hear it referred to as the NBBO, and that stands for across all these exchanges in the nation, what's the best bid, meaning the highest price someone's willing to pay for a stock, the best offer, meaning the lowest price someone's willing to sell that stock for. And then combined with that, you'll want the last sale, meaning the most recent transaction that actually went through at a certain price, because that is what the SEC and all these different exchanges consider to be the stock price, is actually that last sale, the most recent one, because if it's trading at that price somewhere, that's what the is considered to be the stock price. If you're actually executing trades in your platform like you're a brokerage, you have to have the MBBO. You have to show that to your users, because that's the only way the SEC can guarantee that consumers at least know that they're executing in the ballpark of that MBBO. Because if I think that, I actually don't know why they did that at some point, but presumably you could say, you could execute trades far off from the MBBO, and the folks that you're executing trades for on your platform would never know. But the problem with the MBBO is it's very expensive. There's only a few providers of it that consolidate all those exchanges. It's NYSE and NASDAQ do that. And because the SEC's kind of had it limited for a long time, those firms charge large fees to get that access to that data. And a lot of that's mandated by the SEC. What it amounts to is that using the MBBO on your platform is extremely expensive, talking six figures or higher, usually, depending on your platform, things like that. And this is where you'll first run into exchange fees and per user fees, and then the different vendor fees that go into it as well. So if you're getting data from an exchange, they'll have exchange fees, and getting the consolidated tape has exchange fees as well. And then you'll also have per user fees, meaning every time you show that data to a user, you have to track that, and you might pay a small fee, or you might pay a monthly fee for that user. And that can get very expensive very quickly, especially if you have a lot of users. And then you also have connectivity fees. So whoever's providing you with that data, they'll charge you to set up a server and connect you and all these other things. So you have 3 different levels of fees just to connect to that data source, to pay for your users, and to pay the exchange fees. And it gets extremely expensive. So if you don't need the MBBO, generally speaking, you shouldn't use it. And that means you'll get a little less quality, but it's going to be dramatically more affordable. So instead of the MBBO, what are your options? The biggest 3 players in the industry are NASDAQ. They have a product called NASDAQ Basic. And then CBOE1 has another about the same quality of data feed for real-time stock prices in NASDAQ, and then NYSE as well. But together, those 3 make up about 60% of all trades going through those 3 exchanges. And they're generally, all 3 of them are considered to be very high quality. So you're getting when you're buying that data, what you want to look at is how close are the trades on that exchange to the MBBO that you'd see in the consolidated tape. And you'll see things advertised like 99.5% of the time trades on that exchange are within 1% of the MBBO, something like that. And that'll tell you, there is not a lot of drift between what trades are happening on this exchange and what's happening across all the exchanges. The more volume that an exchange has, the less drift you'll get from the MBBO. So you can go out and you can get pricing from all these different exchanges, and it is going to be cheaper than the consolidated tape. Otherwise, everyone would just use the consolidated tape. Depending on your needs and your preferences, it might be good enough for your users. They're not really going to notice a 0.5% difference in volume if they're just looking with their eyes at what a stock price is. You can't really tell the difference between the MBBO and what's trading on most of the big exchanges, because there's so much volume moving through all those exchanges that they all tend to converge and become very close to each other because of this effect that people who are selling their stocks, if they're not going to sell it on an exchange at a very different price from what they could on another exchange, because the buyers will move and so will sellers. So if you're going to execute at a lower price, you just pick a different exchange, and the buyers are doing the same thing. So all these different exchanges tend to kind of converge onto that MBBO. They do drift. There are moments throughout the day where trades happen at different levels than what within a small amount of the NBBO. That's very normal. But generally, the bigger the exchange, the less you'll see that. You don't want to get it from the UTP, for example, for right now, because it's too expensive and you're not doing trade execution. So you go look at these other exchanges. You're still going to have a exchange fee, and those are generally regulated somewhat, but they're pretty high, thousands of dollars a month. You're also going to have connectivity fees at most of these providers for setting up a server and connecting you, or even if you go through a third-party vendor, you'll have those connectivity and third-party connection fees. And you'll also have per user fees at all of those big exchanges. So every single user that you have to track. And that tracking piece becomes very not just expensive, but also time consuming for your team, because you're going to have to build a system on your end that users either log in or you have some way of tracking them so that you can report back to those exchanges every month. And now you have an administrative task to do and then a bill to pay that varies every month instead of just a flat fee. To get the data, you're paying for all those users, and that can become very problematic as well. So if you have a platform with a paywall that you can track how many people behind it, it might make sense to get that high quality data, but most of your users aren't going to know the difference between like the stock price on one of the bigger exchanges and a smaller exchange for large cap stocks that are traded quite a bit. So every minute, for example, tons of shares of Apple are being traded, tons of shares of Tesla, because lots of retail traders are interested in that, lots of institutions are interested in that. But if there's like a small micro cap or small cap stock that nobody even really knows about, isn't trading, that you're going to see a bigger problem with the latency between the NBBO, that drift, and that small cap stock than you will for a large cap stock. So you don't want to pay for a service you don't really need if there's no demand for it from your users. So your next choice is to go to a smaller exchange, and there are exchanges that are very very affordable, just a few $100s a month or less than that even, that are out there. And they are the exchanges like IEX and the Members Exchange, and specific smaller exchanges like Chicago, NASDAQ Chicago, and IC National. They do a very small amount of volume, less than 1% in many cases, or 1% to 2% in others, of all the trades are happening on some of these smaller exchanges. Because remember, NASDAQ, NYSE, and CBOE1 are picking up almost 60% of the market for all that trades. So you can go to one of these smaller exchanges, and depending on the exchange, you might not have per user fees, and you might not even have exchange fees. Maybe you have connectivity fees, maybe not, but navigating all those smaller exchanges takes a lot of experience, in knowing which ones have which fees can be kind of hard to figure out on your own. But in general, those smaller exchanges are going to have orders of magnitude fewer fees and lower costs than some of the bigger exchanges. And what you save there, you get what you pay for. You're saving money and a lot of overhead and pain of tracking and counting all those users, but you're going to get a lot less volume, and your end users that you're displaying those stock prices to, they might notice. It might be a small stock, and they say, this is way off from what I'm seeing on other exchanges or on other websites when I go there. And that might happen, might not. Depends on how you're displaying the data and who you're displaying it to. So if you want to, you could start with a small exchange, get up and running, do your user testing, show that to users, save a lot of money. When they start noticing you start getting a bigger budget, you can upgrade to some of those other exchanges and upgrade to the UTP and CTA, which are other words for the consolidated tape as well. So what I like to do at Intrinio is we talk about this journey you can go upgrading. You don't want to pay for more than you need, and so you should start with some of the smaller exchanges on your platform. And the reason why people don't do that, start with the smaller ones, move to the bigger ones, and end up with a very high quality, low latency, a lot of volume exchanges. The reason why people don't do that is because transitioning your platform from one data provider or one stock exchange to another can be really tough. There's a lot of paperwork to submit. You don't want to get on the wrong side of regulators, the SEC or the exchange. So you want to make sure you're doing everything properly. And that's what Intrinio can help you with. We can make sure that you're getting set up at a low cost, the lowest possible cost for what you're trying to do, and then help you navigate that as you grow to some of these bigger exchanges. So just picking the exchange is only half the battle. You have 4 or 5 other problems to deal with as well, which is how are you going to connect to that exchange? You can set up a server. You could go there yourself to the data center. Usually they're in New York, or depending where the exchange is located, you might have a different data center in other parts of the country, but you can physically set up a server and take a plug and plug it into the exchange, the exchange's server, and then plug it into yours, and then plug your server in. I'm sure that oversimplifies the technical problems dramatically, but there are a lot of companies that do that. They pay to have a server there. That is expensive. And then they, in addition to paying for that server, they pay someone to go maintain it and make sure that it's up and running at all times. That is a nightmare for most companies. If you're just trying to set up a website and set up a platform or build out a tool for your users, you don't want to be hiring people in New York that have to go physically set up servers. So you can work with a third-party vendor that has already done that. We, like Intrinio, has that infrastructure set up for you. And then you can either connect, if you're not connecting directly, you connect over API. And so what we see most of our customers doing is going with either a REST API or a WebSocket API. And those are, one is less latent and streaming, pushing updates to you. The other, you're requesting updates, and usually you'd go with the REST API if you don't need to update what your users are looking at as often. WebSocket, if you're caring more about showing more frequent updates to your users. Slightly different costs just in terms of server costs there, but usually you can work with a third party like Intrinio to get that server set up for you. And then your last step after you have that server set up is you're going to have to submit some paperwork. If you're getting real-time options prices, you have to submit paperwork to that exchange, Oprah usually. If you're getting data from IEX or MEMX or NASDAQ, whatever exchange it is, they all have slightly different paperwork to submit and different departments you need to contact. And navigating that infrastructure and getting the right paperwork and boxes checked so that your access can be approved is in itself a huge challenge, and that's something else that Intrinio can take care of for you. So if you're worried about that, or you don't have experience with do I need to report users for this exchange? How often do I need to report them? How do I pay for this? And what kind of API should I use? Usually you end up working with a partner that can help make that simpler for you, unless your business is truly setting up and connecting low latency real time fees and you're a high frequency trader, in which case you probably knew everything we've been talking about so far and you don't need us. Go do it yourself. So that's just a little bit of the complexities of the real-time market data world. And if you're interested in learning more about that, just contact us. We deal with this every day. We've done it for thousands of customers, and that experience can make your life a lot easier. You don't have to be worrying in the middle of the night if your server over at NY5 is going to go down, and you'll have to run over there in your bathrobe and slippers and plug it back in and, put more gas in it. We can take care of that for you. And you don't get that knock on your door from regulators or a letter from the exchanges saying, hey, you're doing something with our data that you're not licensed for. You can focus on your business and displaying the data to your users and growing your own company.
My guest this week is Yates Sayers. He's the Chief Sales Officer at Intrinio. Welcome to the show, Yates.
Thanks for having me, Andy.
Yeah, you bet. Why don't you just tell everybody a little bit about your background, like how you got into data, how you got into finance, and like how you wound up at Intrinio.
Sure. So I, out of grad school, I went to grad school at Wake Forest and did a master's in science of business management. So kind of open to, the finance world, but also just business in general, building that base background. And via the Wake Forest community, my first job out of grad school was FactSet, which is one of the industry giants in terms of the financial data, financial platform world. So competes with the likes of Bloomberg, powers data for the institutional asset managers, institutions out there needing financial data. So started my career there as a consultant, where I got to consult on some of the largest pension plans in Texas. I was based in Austin, Texas. And it was a great experience from a kind of traditional data side of how institutions use data, work with data, present data across all aspects of the industry. So from the trading team to the portfolio management team to the operations side, it was cool to work with all the different departments, getting a sense of, again, how these institutions are using data, how it flows throughout the institutions, and what it takes to just support those type of implementations, et cetera. So I primarily supported, a terminal, financial data terminal, again, across all aspects of an institution. I was at FactSet for 3 years, and I realized this trend in the industry of, less spend on actual terminals. So less spend or less time spent inside of a terminal and more demand for getting the data outside of the terminal and needing data to kind of create their own models or power their own platforms, applications, which again required getting that data out and needing something like an API or being able to work with data in SQL to power their own models. So with that in mind, I actually was connected from a family friend at the SEC to Intrinio, which at the time was a 5-person startup, but incredibly brilliant people there, including Andrew, who were at the forefront of the industry, on the cutting edge of realizing the same thing I was, that the trend in the finance community was needing to get data outside of a terminal platform, needing more flexibility with data to create platforms, applications, et cetera, that really wasn't an option for a lot of the retail smaller startups out there due to the costs in the past and still to today. And there was this great need for just affordable, flexible, quality, easy to use, easy to get connected to data via an API to power their platforms, power their sites. So joined without hesitation as number 6 at Intrinio. And from there, we're now a team of around 30. So been a wild ride, but a fun one, and come a long way since there, Andy. So
yeah, we sure have.
Been a cool ride.
In the beginning, you were wearing every hat at the company possible. Why do you think the industry changed that way since you came from FactSet to Intrinio? Like, what was driving the need for these customers to get out of the terminal? Like, why?
Yeah, so I mean, traditionally, and still used today, but the traditional model or the traditional kind of use case was, analysts, PMs building their views in a pre-canned default view in a terminal or building a platform in Excel. But it's incredibly restrictive, and it's incredibly kind of under the older seat model license, where you license to a single seat. You can access that data on the terminal, but if you want to publish a paper with the data, if you want to redistribute the data throughout the firm, or God forbid, you want to actually display it outside of your firm, that has always been a no-no. So as firms, as these institutions even are trying to continuously innovate, stay on the cutting edge, build their own platforms, trading platforms, even like a Robinhood, to stay ahead, connect with that retail market, compete with some of these startups up and coming that are starting to compete with them in terms of the services they provide. They need to innovate. They need to stay ahead of the curve, and to do that, they need flexible data. They need flexible licensing to power these ideas and power this innovation and power these new apps and views and platforms that you just can't get into your traditional view, due to that kind of old dinosaur type model where you're stuck in that terminal, you're stuck in that one view. It doesn't give you the power to create, build your own models, build your own views, and again, just innovate with some of these new platforms and ideas and such. So I think that's the main piece, just that desire to create, innovate outside of the old restraints. And you can't do that with data in Excel or stuck in a terminal.
Yeah, there's a lot of pressure on investment firms or anyone doing research and trading stocks to compete with other traders and other people out there. And if you want to take like a data science approach and have special competitive analysis, good luck doing it in a terminal. It just makes so much sense to me. Why do you think that like data companies like Intrinio, like what are some of the challenges that we face like in selling data that way? Because 10, 20 years ago, nobody was selling data via an API or data for developers, that kind of thing. Like, what are some of the challenges that you face on a day to day in like winning customers' business with when your business model is just data?
Yeah, so what's neat about Intrinio is we work with the full spectrum in terms of client types. Since we provide an API where the plumbing, we're fortunate enough to work with everyone from more the retail market, so individuals building their own platforms, or they're powering their own models, to large institutions powering new ideas or applications or sites that they're building. So each client type has their own difficulties, or there's different pain points associated with each. But the main one for the smaller kind of retail market startup community is kind of that you get it too. This data, this is public data, especially on the fundamentals piece. It's public data. Why is it free? Or why is it not free? Why do I have to pay for this type of data? And while it is free on the SEC site, the data is unstructured and unstandardized. So while it's free, the cost to collect that data, normalize it, standardize it in a format that you can compare apples to apples to different companies, clean the data. A lot of these companies, even the bigger ones, when they report, they make mistakes, they mess up line items, they don't report, or they hide items occasionally. So being able to, even though it's public, capture this data and present it in a meaningful way or get meaningful results is not as easy as just scraping the SEC. You need a dedicated provider, whoever it is, to get you this data clean, normalized, at a high enough quality that you're confident in the data you're receiving. So I think that's the main educational piece for especially the smaller clients of, this is why we're providing this service. This is why it's so important. We're taking all of that headache away from you so that we're giving you data that you can be confident in, that's high quality, that's clean, that's quick, taking that headache away from you so you can focus on what you're good at, building your models, ideas, platforms, sites, et cetera. So that's kind of on the one side of the market. And the other side are with some of these institutions, they're still a little bit in that old school mindset where, they have all this data. They have a FactSet, they have a Bloomberg, they're happy with the results. They know what they're doing. They've done it for years and years now. So it's a matter of staying ahead of the curve. So, there are institutions out there more and more every day that are getting more innovative, that are doing more cutting edge things. And if you don't do it as well, if you don't learn, the data science, like we talked about, if you don't have a data science team, if you don't have an R&D team building the next and greatest thing, getting data in new creative ways, getting new types of data that, may not have existed even like a year ago, you're going to fall behind. So it's on the institutional side, it's, convincing these institutions or discussing with these institutions that you may already have this data, but do you have it in a way that's conducive to powering your ideas, your innovation, getting it outside of the traditional models, the traditional mindset of being in Excel, being in a terminal? Do you have it in that clean format that you can trust and display it externally, redistribute it to all of your clients? And the answer is no in the majority of cases. So those are kind of the two sides of the coin that I see.
Yeah, it's kind of like the way I like to think about it is if you're going to work with a company like Intrinio, you're going to right out of the gate save yourself 5 years of work with a whole team of developers and millions of dollars of investment in getting the data formatted and ready to go. You can skip all of that. It's just that cost is not really thought about. Nobody's like, oh, if I want to use data, there is going to be some six-figure developer and a data scientist somewhere that's going to have to just get started manipulating that data so that they can use it. So you mentioned the early days of Intrinio. It was just 5 employees. You came in. That team, I remember what that team looked like. It was very small, just like one developer, maybe two, marketing person, and that's about it. What changes can you talk about some of the innovations that happened, like as the team grew, like the things that Intrinio was able to add in that made them a better data provider from that very early time till now?
Oh gosh. I don't know how long is this podcast. I don't know where to start. So we our bread and butter has always been at Intrinio our fundamental data. So at our core, we've always had an edge in terms of being that primary fundamental data source, having a proprietary machine learning algorithm that's collecting, standardizing the data. So that aspect of removing human error from collection, that aspect of speed, we have the data within 10 to 30 minutes of a company filing. That's always been there. And that's what Intrinio really started as, and why we've still been successful to this day, is that automated approach with clean data. But over the years, we've stayed successful, and I think we've stayed ahead of the curve, just understanding and following market trends. So the same thing when I was at FactSet, I noticed this trend in the industry towards more open, accessible data to build platforms and ideas. I think in Intrinio, we're always on that cutting edge of listening to customers' needs, what they want, how they want it, when they want it, and taking advantage of that. So from a data side, it's adding new features. We're very nimble, of course, as such a small firm. So enhancing our fundamentals data by adding ADR coverage, for example, adding risk factors, adding these things that we're hearing are not as available, not as accessible in the market, and just being able to listen and respond to our customers' demands. So always adding new data, enhancing our data set based on customer needs. And it goes not only from the fundamental side, but from a market data side as well. So we've expanded to real time based on customer needs. We've expanded to asset classes, now offering a real time options feed. We just added unusual options activity based on demand in the market, and that's been incredibly popular. So being on that cutting edge with new data sets, adding additional tooling tailored towards developers and engineers, and just being the highest quality platform for engineers and developers, I think has always put us, ahead of the curve compared to our competitors. From a team side, back in the day, it was the three of us really on sales support. We used to call Salesport because there was no difference. We had all inbound leads coming in, and it was either a support conversation, a sales conversation, or both. And over time, we've especially in the sales team, have really created a organized sales machine where we have a full customer success team now with 3 members of the team. We have a sales team doing both inbound and outbound now, which we've never done before. We have a SDR team fielding inbound requests and calls and doing their own outbound activity. We have a sales engineer. So again, not only being smart from the client side on the data and tech space, but also internally building out our teams, building out our capabilities, and putting us in a really good position to support, grow, and break into new markets with the team structure.
Yeah.
So across the board, we've grown quite a bit.
Can you talk a little bit more about that feedback loop between the customers and the dev team? So they say, hey, do you have this? Oh no, but we can add it. How do you control that process so that it's not like the dev team is just kind of always scrambling? They can be strategic, but then they're also heavily influenced by the customer input so that what you build can sell. How does that process work?
Yeah, it's it's a challenging one, and it's incredibly important because, as you kind of hit on, you don't want to bog your developer team down with an enhancement that only a handful of clients are interested in. You need to be smart about it. You need to make sure it's worth their while. So having that prioritized product roadmap enhancement lift is critical, and it's only going to work if it is based on that customer feedback loop. You need to be building products. You need to be enhancing your products based on what your clients and the market is demanding, or there's really no point. So our customer success team does a tremendous job, and our SDR team as well. So that full kind of aspect of current clients, what are they saying? And also new clients coming in, what are they requesting? We do a really good job keeping track of that and marking down. And just like what we did for the unusual options activity, there was clearly a high demand for this data. We communicated it from customer success, communicated it to sales, sales communicated it to me, and as a team we discussed. And then we brought in the engineering team to discuss what this would take, why it's important, why we think we should add this, why it's worth our while. Engineering got it done in a matter of months, and it's been our most successful product over the past, let's say 5-6 months. So it's that constant loop, that constant organization and prioritization based on what customers are saying. You have to have that if you're going to be successful and continue to grow and hit on new market trends.
I think it takes a lot of trust to get customers to open up and talk to you. You have to kind of have a brand that's based around this is somebody that's worth talking to. This is worth somebody spending time with. And I think that's a big part of Intrinio's brand, like over the years, and it's taken like a lot of work by people like you to get there. Like, how do you build that brand where customers are willing to tell you what they're interested in and give you that feedback? Like, what does that take?
Yeah, I think it's that trust aspect you mentioned. So when I was at FactSet, I was a consultant where, our business was, I wasn't a salesperson. I wasn't only support. I was kind of a hybrid of both where the client is confident knowing that what I'm pitching and what I'm selling is not just to sell you something. I'm pitching it because based on the needs, based on what I understand you need, based on what's in your best interest, I'm providing you with a solution that I know will make you successful. So it's over time, you do that with a client, over years, you build that trust. They view you as their almost data expert, data consultant. They trust you with not only the data, but I've had the privilege of working with a lot of platforms and companies that, I'm actually advising on their designs, their views, like what to build next, which is really rewarding. So it's that aspect of going in as I'm not just selling you something because I need to hit a quota. I'm selling you this, or I'm pitching this to you because I truly do believe it's in the best interest of your company, your app, your platform, because X, Y, and Z. And here's why. Here's what other companies are doing, et cetera. So building that trust up from day one, making them feel confident that you do have their best interests at heart, leads to a much better, not just client relationship, but a partnership relationship where now you're both kind of in it together and you feel like you have a lot bigger, part of their business, which again is really rewarding to see we work with a lot of financial technology companies, early startups, to see them grow from a team of one or two with a kind of an idea to a robust platform of 10 plus people. Like in the Intrinio story, it's really cool. And it's really rewarding to see your work and the work you've done with the partner kind of come to life as well. So it's a rewarding experience both ways, I think, from the client side and
Yeah,
from
you've been here
well.
growing a business just like every one of our customers is trying to grow a business. So like what their struggles are and how you can help them. And it's very, I think, genuine kind of the relationship to like they want you to have 30 employees, 40 employees, go from a small team to a successful growing business. I think that it's easy to relate to.
It's cool. I've just been talking on the sales side, but it's so much larger than that, where from a marketing side, for example, we work with these companies and we want them to be successful. We want to drive traffic to their platform. So we'll do co-marketing activities with them. We'll do blogs with them. We'll do social media campaigns with them, which with the goal of getting viewership, users to their platform as well. So it's just that total package of that partnership aspect, not only from sales, but from marketing to engineering, doing custom builds, custom work with them. It's just viewing that Intrinio again as almost like your data partner, your data like subsidiary almost, that will take care of all of that for you. It's I think that goes a long way as well.
Can you talk about some of the failures along the way, like some of the stuff that just went horribly wrong? I mean, you've been kind of pioneering this idea of like selling data. It's not like, you can look back at the management literature from the 1940s and be like, oh yeah, this is the way that data's always been sold. Like you made a lot of mistakes, I'm sure, along the way. Like what was that like? Do you remember any significant ones?
Yeah, I can remember a few. So one idea I had that I drove was back in the day when we still had the idea of a marketplace. Back then we weren't focusing as much. We still were, but we weren't focused as much on our proprietary feeds, our own data sets. We were building this marketplace up of third-party data sets. So just focused on building as many data sets as we can, offering as many as we can in a marketplace, regardless of if it's our own proprietary data or not. And to go off on that, one of the ideas I had and I wanted to implement was this idea of a private kind of for your eyes only marketplace called Profit, which was this alternative data marketplace. It was kind of to build, FOMO, like it's these high alpha generating data sets. We don't have them in our traditional marketplace. You have to request access. And if we really like you, you'll be invited into our marketplace and get to see our special catalog. And I thought that was just a genius idea because it's just builds off of our marketplace. We're a core marketplace. And now we have this Profit alternative marketplace where the largest institutions can come in and browse our data sets, et cetera. And it was quickly obvious that this was just not going to work. There are a ton of options out there for these companies that are more of a data facilitator or a data referral type business of alternative marketplaces that have hundreds of alternative data feeds that they can make the introductions. There's hundreds of those types of companies. So I'm trying to compete with them with profit with, I think at the time there were about 5 or 6 data feeds in there, and I had hopes of growing it, et cetera. But it was an utter failure. And what's nice about Intrinio, though, and our CEO says this all the time, is you're encouraged to try new ideas and fail. Like, you should be trying something and failing, quarterly. Like, you never know what's going to stick. So we ended up as a result of that, we ended up completely kind of transforming our business from a marketplace, not only from the profit alternative data side, but from a core marketplace side, into a more B2B platform, B2P business, where we focused more on our proprietary data. We made it a more consultative approach, where it's not just a self-sign-up marketplace. You come into us, we listen to your needs, we customize a package just for you. And that was really successful, and it's been really successful. So failed attempt at that, but I think the result was a stronger business and a more appealing experience.
Yeah, the best part of failure for me is how confident everyone is at the beginning of it. You're just like, yes, this is it. This is the one. And then you look back and you remember all the failures along the way, and it's like, well, maybe 1 in 5 was a good idea. And so it's like, yeah, failing fast is a really good thing to do, especially with data, because I don't think every data set is as valuable as every other data set. So like sometimes there's just not a lot of longevity in a data set. Like, what do you think it takes for a data set to be valuable for a long time before it, kind of loses its luster?
Yeah, so it depends on, I think it depends on the type of data. I mentioned like a core marketplace, a core data set, and that's things like core equity research data, like standardized financial data, historical end-of-day stock price data, estimate data. That will always be needed, and it's just required for really all types of firms. From the smallest startups, you need that data to build your platform. Everyone needs that data if you're building a financial platform. To the largest institutions, of course, you can't get away from that data. So on that side, it's less about, these data sets are alpha generating. I can prove that they're generating alpha. It's, you need this data, this core traditional data, to then build new ideas, build back test to come up with strategies that will generate you alpha. But regardless, you need that core data to power your algorithms. So that data is always valuable. You're always going to need it. But on the flip side, the profit databases,
alt data,
which I thought why it would be really popular, is alt data, where that has a very short, in most cases, shelf life, especially on like some sentiment feeds, like a real-time trading sentiment feed, for example. If that can prove to generate alpha, if that becomes saturated in the market and everyone's doing it, it becomes worthless almost. You need the next feed that's going to generate alpha compared to your competitors. So it depends on the type of data. But again, our focus is on that core equity data that's always needed. And we do it as well as anyone out there, if not better, in terms of our quality, speed, et cetera. So there's always going to be a demand for that. But finding that, still haven't given up hope on that. Finding that kind of profit type alternative data set that, is just high alpha generating, and you can prove it to these institutional clients, they're going to be interested in it 10 times out of 10. So just 2 different kind of strategies, 2 different
absolutely
buckets of data.
What do you think is going to happen next in this crazy world of like fintech and app development? Like, who's on the cutting edge and where are they going? Like, where can we see the next big thing?
I think we're in a space now where the core fundamental data, market data, it's becoming more accessible. It's becoming more normalized. Now we are standardizing it. There are not a ton of primary sources of standardized financial statement data or primary data. Most of the providers out there are redistributors. They're just reselling third-party data. So there's not a ton of options out there for primary databases, but there are other options out there for, how to get this data, how to get normalized, standardized, structured financial data, core data. What I think the next phase is, or if someone can master this, I think they'll be, well ahead of the curve and stand out from the rest is, okay, we've structured this core data. We've structured this financial data that's been used for years and years and years. How do we now take in all of these new alternative data sets, like satellite images from Walmart parking lots to get a trend of buyer profiles or how Walmart is doing, projecting Walmart revenue, ESG data sets like all these different ESG sentiment ratings, rankings, et cetera. How do you take these more fringe data sets that are out there and growing and structure them in a way that they're simple enough to understand, utilize, implement, and ingest as the core data? So the core data is kind of the central hub. Now there's all these fringe data sets. How do you wrangle those in and structure them in a way that it's easily presentable, easily understandable, easily normalized? And if someone does that, I think that's that next phase, just more structure to that unstructured.
Right. It's like a retail trader is going to go read a financial statement, and it's a 10Q cash flow or income statement, something like that. But what are they going to do for ESG data to really know, like, okay, what's my bedrock standardized ESG information if I'm interested in investing that way? Yeah, and the answer is still kind of up in the air. I think that's a really great insight. Can you talk a little bit about what it's been like running this data company and making data sales during the pandemic? Like, how do you keep yourself sane, like on all these Zoom calls in your life? Like, what have you learned from working remotely all this time?
Yeah, it's been challenging, especially when the pandemic hit. I think we were at about I don't know, for 4 or 5 maybe people on the sales team. Now we're at 13, 14 on the sales team. So this remote working, considering, meeting our new employees, getting to know them, training our new employees, getting them up to speed, it's considerably more difficult, of course, remote. So that put in a tough wrinkle over the pandemic. But I think Intrinio has always had a really good culture in terms of an open door policy. We use Slack, so an open Slack policy. No one's off limits. You and Rachel are on all the intro calls, the welcome to Intrinio calls. I think that goes a long way. So having that strong knit culture where you feel comfortable to talk to anyone, you can hop on the phone with anyone at a minute's notice. We obviously use Zoom, but seeing each other on camera obviously helps a lot to at least build some sort of face-to-face interaction. So I think Intrinio's culture as a whole has really helped get through that. But personally, I have a 1-year-old daughter at home, so she was a pandemic baby. So I think working from home can feel stifling, but on the flip side, being at home and being able to spend a ton of time with her, she'll come interrupt me during the day, which I don't mind at all. So just being able to spend time with her, being able to just walk downstairs, no commute, and see her has been definitely a healthy thing.
So worth it
as well. So that's been
that's awesome.
Nice. Yeah.
All right, I'm going to steal you for one more question. I know we're running up on our time today, but like, talk about Slack. Like, or if someone uses Teams, it's the exact same thing. Whatever chat tool your company's using, like, how has that influenced the culture, and how do you keep that as like a positive thing instead of a distraction that just like keeps anyone from doing any deep work? Like, what has worked for you?
Yeah, so that's a difficult challenge as well, because again, in this world, the majority of our communication occurs through Slack, and it's fine for kind of one-off things, but any strategic discussions, any bigger projects, any bigger discussions, if you try to have them in Slack, you step away from a minute, you come back and you get that dreaded 9+ red little bubble on a Slack channel, and you're like, oh my gosh, I've got 100 messages to read and catch up. It's impossible. So I think it's something you can get in trouble with if you don't treat it like what it is, like a quick communication, a quick convo platform. But anything more serious, we do a good job of this. And Slack, no free ads, not to promote Slack, but Slack just added this little huddle feature where you can, if you want to talk to someone really quickly, it enables a very quick, call via Slack that takes 2 seconds, and it's so much easier to talk and hash it out over that than, back and forth messages where messages can be misconstrued. It just gets you in a lot of trouble. So it's difficult, but if you treat it like what it should be, and you make sure to have calls, meetings where appropriate when needed, it's not too bad. But another thing I've done, not kind of go back to the last question, is I block off an hour period every morning that is from 9 to 10. That is free from Slack, email, anything. So I have it blocked off. There's no meetings during that time, and it allows me to kind of get ready for the day, knock out some tasks that I may not have time for throughout the day. So that little time in the morning where I can kind of get my head straight, knock out those tasks that I know I need to prioritize. And then the rest of the day, I'm not as scrambled, or I'm not as rushed to, ignore Slack because I need to get XYZ done. I think that helps quite a bit. It helps set the day right, if you will. So definitely a challenge, but we've had a while to figure it out now. So I feel like we've got it figured out, and it's in a better place.
Your hour of sanity. I'm going to try that. Okay, now here's your completely unrelated to business and data question. Let's say I gave you $1 billion and told you you had to spend it on a sports team. Which sports team are you going to buy with that $1 billion? And then what are you going to change at that team? Like, what you come in, you now are the owner of the team. Like, what's day one? Here's my empire. Here's what this sports team is going to do.
So I think I would go for a team where $1 billion would go a long way and I could do a lot. So for example, I don't know what the Cowboys are valued at, but I think $1 billion might buy you a hot dog at their stadium at this point. So to keep it local, I mean, I'd want to stay locally. I would probably buy the Tampa Bay Rays. I think that would go that $1 billion would go a long way. And I would love to move them to Tampa.
Controversial.
This is unrelated, but I would love to get the high-speed train idea going that's been talked about forever between Miami, Tampa, where else was it? Fort Lauderdale, I don't know. That high-speed train connecting like different, aspects of Florida to bring in the Miami fans, to bring in fans across the state as well, to this brand new Tampa stadium right on the water. Free beer night maybe every other night, just test that out for a little bit. Things like that to get the people going. But that would be a lot of fun. I love baseball. Then the Rays are a great team. It's just I think
you already blew your budget out though if you're going to put in high-speed rail and free beer. Think about the liability alone. You're going out of business.
True.
Awesome. Well, thank you so much for taking the time to talk to me, Yates. This has been a real pleasure.
Thank you for joining me for this episode of Fintech What the Heck. Thanks to our sponsor, Intrinio, a financial data partner for innovators in finance. You can learn more at intrinio.com. I'm Andrew Carpenter, and I'll see you next time for more of what's new in Fintech.